The first light of morning always carries something strange, quiet, yet powerful. It spreads across empty streets, reflects off towering glass buildings where the financial world still sleeps, and falls upon those searching for something they've never fully known how to name: certainty in an uncertain future. In that world, money is never just a number. It is an ambition. It is fear. It is hope. It is proof that you exist. And it's also the force that can crush a heart in a single careless moment. In the stock market, there's no shortage of victory laughter, but far more common are whispers of regret from those who hoped too quickly, trusted too easily, and collapsed without resistance. Somewhere in that chaos lives an old philosophy, sharp and relevant as if forged yesterday: value investing. It does not promise overnight wealth. Instead, it quietly opens the door to something far more rare and far more powerful: control. Benjamin Graham didn't write The Intelligent Investor as an invitation to chase excitement or gamble for glory. He wrote it as a warning, a map meant to guide readers out of the emotional maze where fear, greed, and self-delusion repeatedly defeat logic. He once said a sentence that silenced the entire market: "The investor's chief problem, and even his worst enemy, is likely to be himself. Not the market. Not politics. Not economic swings. But the human mind, afraid to lose, desperate to win, convinced it is special, smart, and immune to mistakes." Many enter the market like moths drawn to a light, believing luck is on their side. They buy when everything rises in wild euphoria, and they sell when panic buries reason. They live by the heartbeat of the market, not the discipline of the mind. The intelligent investor is different. He does not chase the crowd. He does not react to chaos. He does not fantasize about overnight miracles. He watches. He waits. And he acts only when the opportunity is right, not when the world is loud. For him, investing isn't a race. It's an internal journey, a test of patience, discipline, and the ability to see through the fog of excitement and fear. And within that journey stands a sacred principle: the margin of safety. As Graham wrote, the function of the margin of safety is, in essence, that of insurance. It is not magic, not a secret formula. It is simply the gap between a company's actual value and its market price, the buffer that protects conviction against the unpredictable swings of reality. Yet most people reject it. Because margin of safety demands something very few possess: patience. The market rewards frenzy in the short term, but only honors discipline in the long run. Impatient investors are like those who demand a giant oak tree to bloom overnight. They forget that time, not excitement, is what turns a seed into a forest. And it is time, not technique, not theory, that becomes the greatest ally of the value investor. When Graham introduced Mr. Market, he wasn't being playful. He created a metaphor to expose a truth. The market is not wise, not fair, not rational. It does not know who you are, care what you hope for, or owe you a single result. Mr. Market is unstable, ecstatic one day and terrified the next, wildly overpricing assets today and selling them cheaply tomorrow as if fleeing from a fire that never existed. A novice investor trembles before Mr. Market. A wise one waits, patiently, until irrationality creates opportunity. Because that is the moment when price separates from value. And opportunity arrives, not loudly, but with depth. In the world of investing, it's not information that matters most. Not luck. Not technique. It is the ability to remain calm while everything around you falls apart. Some believe investing is about winning. But the truth is harsher. Investing is about minimizing losses. Because a single catastrophic mistake can erase years of hard work and progress. That is why Graham left the world a simple but ruthless reminder. To be an intelligent investor, you must be patient, disciplined, and eager to learn. No shortcuts. No easy path. No miracles. Only thought, time, and humility in the face of a chaotic market. And if you're still listening, maybe a quiet question is rising inside you. Is this the path to true financial freedom, not through luck, but through wisdom? If that question exists, then your journey has just begun. As the journey continues, another layer of truth begins to peel away from what once seemed familiar. In the stillness, clarity no longer comes from watching daily price movements, but from understanding a deeper question. Will you become a speculator? Or an investor? Benjamin Graham drew the line between these two not through formulas or techniques, but through mindset and intention. He wrote, "An investment operation is one which, upon thorough analysis, promises safety of principal and an adequate return. Everything else, all the shouting, the excitement, the rush driven by fear of missing out, is speculation." Speculators don't actually invest. They gamble, not on the future, but on the chaos of the present. They hope the market will rise tomorrow because it rose the day before. They believe stock prices reflect collective intelligence. Yet they forget the one thing Graham saw more clearly than anyone else. Price is a story. Value is the truth. Stories can be beautiful, exciting, seductive, but truth moves slowly, often quietly, and sometimes uncomfortably. During frenzied bull markets, the confidence of the speculator swells like a sail in strong wind. But when the storm comes, and it always does, their ship collapses. Not because the storm is too strong, but because their sail was never built to survive it. Opposite them stands the intelligent investor, someone who understands a piercing truth. An excellent stock does not always rise in value, but a truly valuable one will prevail, given enough time. At first, this sounds abstract, but the longer one reflects, the more it feels less like a financial theory and more like a law of nature. A seed does not bloom instantly simply because someone watches it for a long time. And a business does not become great just because its stock price rallies for a few days. Price is the shadow. Value is the form. And the intelligent investor does not chase shadows, he studies the form. In The Intelligent Investor, Graham identifies two types of investors, the defensive investor and the enterprising investor, not defined by wealth, but by temperament. The defensive investor is someone who understands their own limits. They do not chase extraordinary returns. They seek steady growth and capital protection. They choose strong businesses, time-tested stocks, and index funds, not thrilling, but resilient. The enterprising investor is different, not reckless, but willing to dig deeper. He studies, analyzes, and waits patiently for the opportunity that the market has overlooked. He seeks misunderstood value, not glamour. And then Graham poses a quiet but weighty question. Which one are you? Not because the market requires an answer, but because the mind does. Without knowing your identity, you cannot choose your strategy. Listen closely, and another truth emerges. Investing is not a game of chance, it is a journey of self-awareness. No one can outperform the market if they continue losing to their own fear. No one can become intelligent if they demand instant results. No one can preserve wealth if their decisions crumble under the noise of the crowd. Sometimes, the market feels like a city built from emotion. Headlines flashing by the second. Breaking news burning across screens. Predictions multiplying endlessly, and charts dancing like sirens designed to distract every wandering mind. But the intelligent investor does not watch with urgency. He listens, through calm. Because silence is where actual value is found. The market may be chaotic, but the truth is not. Prices may rise or fall, but a company's real worth, cash flow, leadership, competitive advantage, capital structure, does not change simply because the crowd panics or celebrates. And slowly, something becomes clear. Value investing is not just a method, it is a philosophy. A reminder that everything enduring requires time, that every worthy asset must be bought through understanding, not emotion, and that every wise decision requires distance from the noise of the masses. If you are still listening, perhaps you've realized something. This path does not promise instant wealth, but it offers something far more powerful. Freedom, from fear, from luck, and from dependence on chaos. This isn't just investing. This is liberation. As we step deeper into the philosophy of value investing, a quiet realization begins to emerge, one that is easy to overlook at first. The stock market is not merely a place where shares are bought and sold. It is a mirror, a raw, unfiltered reflection of human psychology. It exposes greed, it reveals fear, it magnifies fragile hope, and it amplifies illusions that even their creators refuse to confront. In that world, financial decisions are rarely driven by logic alone. They are driven by something far more powerful: emotion. Benjamin Graham understood this. He never tried to teach people how to predict the market. He didn't encourage chasing explosive opportunities or forecasting the next big wave. Instead, he offered something far more valuable, yet often missing in most investors: the ability to think independently. Because when the market becomes chaotic, when fear reaches a boiling point, or euphoria turns into madness, it becomes easy to forget a foundational truth that remains beneath every price chart: intrinsic value. That is the core, the soul of a business. The part that exists regardless of whether screens flash green with excitement or bleed red with panic. In The Intelligent Investor, Graham presents a quiet yet razor-sharp principle. If the market price falls below intrinsic value, it is an opportunity. If the market price rises above inherent value, it is no longer an asset, it is an illusion. Yet what makes this concept so mysterious to many is the passage of time. Intrinsic value does not reveal itself immediately. It does not react to headlines or mimic crowds. It rises slowly, quietly, like a still lake returning to calm after the wind has passed. Those without patience will walk away before it happens. Those with discipline will stay. And that difference alone creates the distance between those who succeed and those who surrender. Graham once wrote, "Price is what you pay, value is what you get." A simple sentence, yet behind it lies a philosophy of clarity. Because most investors aren't truly focused on value. They're focused on movement. The market goes up, they buy. The market goes down, they sell. They don't invest, they react. Like waves endlessly crashing against the shore, yet never understanding the depth of the ocean beneath them. Meanwhile, the intelligent investor sees the world differently. He understands that market prices are temporary opinions. Sometimes correct, but more often wildly wrong. Too optimistic during booms. Too pessimistic during downturns. So volatility, to him, is not a threat, it is an invitation. This is why Graham dedicates page after page to a force most investors ignore: behavior. Because a person may have knowledge, skill, and analysis, but if their emotions break under volatility, their strategy becomes worthless. It's like someone standing at the edge of the sea. When the water is calm, everyone believes they can swim. But when the storm comes, when waves rise, and winds howl, true instinct takes over. Some panic. Some sink. Only those who understand the ocean's rhythm remain steady. The market is no different. Every cycle carries two phases: illusion and awakening. Only those who can see through both truly understand the complexities of investing. At this point, an image becomes clear. Value investing is not about perfection. It is about building enough room for error, so that even imperfect choices lead to wise outcomes. This is why the margin of safety is not just a technique. It is the heartbeat of value investing. Not to guarantee perfection, but to acknowledge that humans are imperfect. And the market even more so. To buy a business at a price lower than its actual worth is more than a clever transaction. It is protection from an unpredictable future. And if someone listens deeply enough, they begin to understand. Value investing is not a competition against others. It is a journey against oneself. A journey requiring patience when others are restless. Discipline when others are emotional. Humility when others are blinded by confidence. A journey where the reward is not only profit, but freedom from the fear the market tries to impose. Those who walk this path never again ask, "What will the market do tomorrow?" Instead, they ask, What is truly valuable, and is it worth waiting for? As the journey expands, a new realization slowly forms. Value investing is not merely an exercise in rational analysis. It is a quiet dialogue between time and conviction. In the world of finance, too many people seek immediacy. They want confirmation within days or weeks. They want the market to endorse their decision now. But Graham reminds us, truth does not move at the speed of human impatience. It appears only when conditions are ready. And this is where time becomes an invisible yet central character. Time does not pressure. It does not shout. But it does something the market never can. It filters illusion and preserves what is real. Businesses with deep foundations are like ancient trees. They do not grow to impress a season. They grow to endure storms, recessions, and economic cycles. Meanwhile, companies fueled only by short-term hype may shine brightly, but they burn fast, like fireworks, dazzling, sudden, and gone. Benjamin Graham understood this better than anyone. He emphasized that a company worthy of an investor's trust must possess three traits: consistent performance, transparent governance, and a realistic business model. Not dreams, not slogans, not inflated projections. He once wrote, "In the short run, the market is a voting machine, but in the long run, it is a weighing machine." In the short term, the market behaves like a popularity contest, emotional, impulsive, childish even. But over time, it transforms into a strict and silent scale, weighing what is real and discarding what is not. At this stage, something becomes clearer. The purpose of investing is not to chase hot stocks. It is to find businesses strong enough to thrive even without market excitement, businesses that build value rather than borrow attention. Graham encouraged investors to evaluate companies not by speculation, but by evidence. Years of steady earnings, responsible dividends, healthy leverage, consistency in long-term vision. To some, these metrics may seem dull. But to the intelligent investor, they are signals of truth. In the quiet discipline of analysis, a subtle yet powerful mindset begins to emerge. A wise investor does not ask, "Where will the price go?" He asks, "Is this a business worth owning?" A simple question, yet it marks the transition from emotional speculation to intellectual investing. Those who watch the market minute by minute become prisoners of volatility. But those who understand value are free. They know that if the business is strong, the price will eventually recognize it. And this is the moment when something shifts, not just in thinking, but in identity. Because the market will always test you. It will provoke doubt. It will test your patience. It will try to convince you that independent judgment is foolish. However, the intelligent investor knows that the actual test is not during gains, but during losses. When the market collapses, the speculator sees disaster. The intelligent investor sees opportunity, not from recklessness, but from understanding. This is why Graham insists that every investment decision must be made before emotion enters the room. A clear rule, a stable philosophy, a standard that does not bend. That is the shield against chaos. And if, right now, the listener feels a shift, a clarity rising between the words price and value, then that is no accident. It is financial maturity taking shape. Because once this understanding settles, another doorway opens. Freedom from the psychological game of the market. A quiet confidence emerges, walking not faster, but steadier. A calm shared only by those who know they are on the right path, even if the path is long. And in that moment, when reaction fades, and awareness takes its place, one steps closer to the true meaning of the word. Investor. As we dive deeper into the mindset behind the intelligent investor, we begin to realize a profound truth. The core of value investing isn't built on complex strategies or sophisticated valuation models. It lies in something that seems simple, yet is incredibly hard to master: discipline. Benjamin Graham understood how easily human emotions can be shaken. That's why he created one of the most iconic metaphors in financial history: A figure that everyone entering the stock market will eventually confront. Mr. Market. Mr. Market isn't a real person, but he exists in every trade, every price swing, every moment of hesitation. He represents the crowd's emotions, their hope and their fear. Every day, Mr. Market knocks on your door and proposes a price for the business you own. Sometimes, he offers something ridiculously high. At other times, he quotes a price so low that you'd think the company is about to vanish from the world. But here's the interesting part. Mr. Market doesn't force you to react. He merely offers a suggestion. A true intelligent investor doesn't dance to Mr. Market's rhythm. They choose when to respond and when to ignore him. If the price is irrationally high, they don't sell because they're greedy. They sell because the opportunity exceeds intrinsic value. If the price is shockingly low, they don't buy out of panic. They buy because they understand Mr. Market is acting irrationally. Here, a clear psychological divide begins to emerge. On one side, emotions crave immediate validation. They need the stock price to rise fast to prove they're right. On the other side stands quiet conviction. The belief that value will always prevail, even if the market refuses to acknowledge it today. Investing, then, is no longer a race to the finish. It becomes a form of meditation. A journey where we learn to listen to truth rather than react to illusions. Graham once reminded us, the investor's chief problem, and even his worst enemy, is likely to be himself. Inside every investor, two forces are constantly battling: belief and doubt. When prices fall, doubt whispers, "You must be wrong." When prices rise, greed asks, "Can we get more?" When others rush to buy, fear of missing out screams, "Are we being left behind?" When the crowd sells in panic, fear of loss begs, "Should we escape now?" But an intelligent investor doesn't answer with instinct, they answer with principles. Principles that don't bend with every headline or every market shock. That's why value investing is often a lonely path. It demands stillness in a world that never stops moving. It demands belief when the crowd doubts, and clarity when the crowd is blinded by confidence. But that loneliness is not empty. It carries a silent freedom. Freedom from the emotional storms that control the masses. In that silence, a sharper form of wisdom emerges. The ability to see a business not as a stock ticker, but as a living organization with history, capability, and a future. The intelligent investor studies its revenue, competitive edge, leadership, financial strength, and ability to endure. They don't ask, "When will it rise?" They ask, "Will this business still deserve to exist 10 years from now?" And if the answer is yes, there is no need to rush, because time becomes their ally. At this stage of understanding, the market undergoes a transformation. It is no longer a battlefield. It becomes a classroom. Every fluctuation is a psychological test. Every opportunity is a test of conviction. And every mistake is a reminder to remain humble. And within the darkness of those lessons, a quiet light begins to grow. We no longer aim to be the ones who win fast, but the ones who win forever. And then, after thinking deeply enough, a final realization emerges, like a horizon appearing beyond the fog. Investing is not a race of speed, but a journey of resilience, patience, and clear thinking. In this journey, the winner is not the one who runs faster, but the one who pauses long enough to see the truth beneath the surface. Benjamin Graham once wrote a line that feels closer to the essence of life than finance itself. In the short run, the market is a voting machine, but in the long run, it is a weighing machine. The difference between voting and weighing is the difference between emotion and value, illusion and truth. The market may label a stock a star, a mania, or a failure, but time continuously strips away the excitement and leaves behind only the core reality. A knowledgeable investor does not see the financial world as a battlefield where the intense crush the weak, but as a mirror reflecting both the shadows and beauty of human nature, desire, fear, hope, doubt, pride, and impatience. When the market surges, people believe they are invincible. When it collapses, they believe the future has come to an end. Yet intrinsic value has never changed as rapidly as human emotions do. Within that stillness lies a lesson most people never learn. Accurate returns do not come from superior intelligence, but from superior discipline. Not from predicting the market, but from standing apart when the crowd screams to chase or to flee. A stock appears risky when it is dumped in fear. A stock appears safe when it is purchased by a crowd addicted to hope. Yet the paradox is this: the truth often stands on the opposite side. The best companies usually emerge in the most challenging moments, and the most dangerous companies are frequently admired in their brightest hour. Viewers may feel distant from this idea because the human mind is wired to react to pain and protect its beliefs rather than accept truth. But the intelligent investor was never written to comfort the ego. It was written to challenge it. Within the book lies a concept that seems simple yet reshaped the foundation of modern finance. The margin of safety, a buffer between intrinsic value and market price, not to guarantee certainty, but to survive uncertainty. Because no forecasting model, no growth chart, no media expert can predict the future without error. But those errors become harmless when the margin of safety exists as armor. For those watching this video, if you are searching for an easy path, a shortcut, a secret reserved for the lucky few, you may eventually realize that this book does not hand you treasure. It hands you a compass. It does not give you answers. It gives you a method, not just a path, but a way to walk it. Those who understand this will see a profound truth. Value investing is not merely a financial strategy. It is a philosophy of life. A philosophy that teaches us to slow down in a world obsessed with acceleration, to question in a world drowning in belief, to be humble in a world that worships confidence, and above all, to be patient in a world that hates waiting. If all of this sounds difficult, it is. And if it sounds like a journey without an ending, it is that as well. Because the intelligent investor is never perfect. He does not repeat the crowd's mistakes. He does not give up when the market tests his conviction. He does not chase the noise when prices scream. Ultimately, he is not ruled by emotion, but anchors himself in reason amidst volatility. Not everyone will become a genius investor, but anyone, if willing to learn, to wait, to think, can become an intelligent one. And that, ultimately, is the true gift this book leaves for humanity. Not wealth, but wisdom. Not money, but freedom from fear. Not victory over others, but victory over oneself.